Hello, everyone. This is David Babs Ajibade. Today, I'm acting as a financial advisor. Of course, I'm a financial advisor. Okay, and I'm going to be sharing my screen. Let me see. Okay, I hope everyone can see my screen. Today is just brief, just to remind us of why we have this product called IUL, Index Universal Life Insurance. And just to remind us of the benefits. There's so many benefits, but we just want to literate some of them. Okay, one of the first one that is tax-free benefit, right? Tax-free death benefit, we call it tax-free death benefit. That is, if anything should happen to you, you are sure that your generation can continue your legacy and even take it higher. So all your cash accumulation, uh, on top of any excess on your death benefit, is given to your beneficiary tax free. And that is huge. And that bypasses probate. I hope you know what is probate is. Remind yourself what is probate is. Probate is a court that freezes your account when you are dead, and your beneficiary might not have access to any of your assets for about 2 years when probate court is doing their investigation, to find out if you owe anybody, any institution, credit card, car debt, mortgage, or any kind of debt. And it takes a period of 2 years. So this bypasses that. That means your beneficiary will have instant cash. They have cash to bury you, to give you a befitting burial, and they have cash to do whatever they want to do, to be able to reclaim your assets and all that. And number two benefit, though we don't call it an investment, is that you get compound interest. Okay, most of the policies I've done, they are like above 10.5% peg, that is on, say, S&P 500. Okay, so 10.5, maybe, the way we design the policy, the cost of insurance is about 1% after about say 7 years, or 5 to 7 years, depending on how we design it. So if you make 10.5% peg and your cost is 1%, that means you are netting 9.5% compound interest. And you know what that means. If you follow the rule 72 divided by 9.5, let's see what that order says. That's 72 divided by 9.5. So every 7.5 years, your money doubles. So say you have 500,000 cash value in your insurance. So after 7.5 years, your money becomes 1 million, right? 1 million. After another 7.5 years, it becomes 2 million. After another 7.5 years, it becomes 4 million. Now, if you see 7.5 times 3, 7.5 times 3, so in about 22.5 years, your money has grown from 500K to about 4 million. Now, some people say, oh, I can do better in the stock market. Wow. Yes, I hear you. That's why this is not an investment, and stock market has risk. This one has no risk. Presently, as I'm talking, the stock market is down. People that have their money in the stock market cannot get their cash out of the stock market, because if you get it out, it turns from unrealized loss to realized loss. It has happened to me many times, and that's why when I was thinking about pursuing a big vision, like if you're a businessman or you are someone that is pursuing a big vision, the first thing you want to do, and that's what the rich people do, is security. See, that's why they kind of think differently from the poor and the middle class. The poor and middle class think of gain first. The gain first. But the rich people think of security first. That means they want to secure their estate. Anything happens to them, anything happens to their money, their family goes on well, everybody's living well, because when you are pursuing a big vision, which the rich pursue, it's a lot of risk. The higher the potential uh, gain you can make in any investment, the higher the risk. I mean, that's just natural, right? That's just natural. The higher the risk. So that means if you want to pursue something very risky, that means you can lose everything. So what the rich do is they put their money in IUL. This gives them security. In case anything happens to them, they can go back to that IUL and borrow. And that's another advantage of IUL. You can borrow tax-free. Okay? We can have to teach you on how to borrow tax-free. Okay? So your advisor should be able to advise you on that. But if you don't have a good advisor, you can come back to us. You can come to us. So you can borrow tax-free. And this has happened so many times from so many companies. So many companies, even Sam Walton has used IUL or whole life insurance, or whole life. We like using IUL because of the flexibility, but the whole life or IUL, they give similar benefits. The advantage in IUL is very flexible, and when you have that flexibility, you can do a lot of it. Okay. To bail himself out when market crash and when the business crash. You're out of Disney. Disney has used IUL or whole life insurance to bail himself out of bankruptcy. That's why Disney is still on today. You out of what's this company? I just forgot. Apart from Macy's, I'll remember. So many companies have used IUL or whole life insurance to bail themselves out, and that is why banks put about 20 to 40% of the cash you give them into life insurance. Banks. I don't want to go into details now. I can give you figures. In some of my other videos, I've given you real figures, of what Bank of America, Chase, they all put in index universal life or whole life insurance, because it's a safe place where they have security and liquidity, because that combination is what you want. You want security plus liquidity. Okay? Why the stock market is liquid, but when the markets are down like it is today, when the markets are down, it is not liquid anymore, because if you withdraw that money, you have made that loss permanently. And what other form of investment? The real estate is not liquid. We don't want to go into that now, but real estate is not liquid. So perhaps the best liquid investment you can have is life insurance. That's why banks put their money there. And it's not only liquid, it's secured. It's secured. They have to have a certain level of reserve before they are granted a license. And they are heavily regulated by the government, by the IRS. So, and they don't put your money in a risky market. Maybe you've heard of index universal life. A lot of people mistake it for that they are putting your money in index market, in index mutual fund. No, that's not correct. They just trail the index market, and usually most of them trail S&P 500 and maybe the a mid cap and small cap. Okay, But I just like S&P 500. Okay, they trail it. At least they try to match your fund according to the performance of the S&P 500. They don't actually put your money in S&P 500. That is why they are safe and they are liquid. Okay. What other advantages? We talk about avoiding probate costs. You know, most of the insurance policy are designed. They have what they call living benefits. Chronic illness. You never know. You never know how significant this is until you grow old. You know, cost of uh, nursing home is going higher, higher, and it's going higher every year. They can't just stop it. You know, this can pay a lot. It can save you a lot, especially with the children we have these days that they don't care about their parents like we used to. You know, I mean, that's a whole lot of benefits. Chronic illness, terminal illness. I'm not gonna go into details on all this, you know, because this video is not for that. Um, Terminal illness and critical illness. Okay. Okay, most of them will give you 2% per month of your death benefits, okay, for chronic illness. Okay, for terminal illness, most insurance will give about 50 to 75% lump sum for I mean this is I'm sorry. This is not for this is for terminal illness uh they give close to 90 to 100%. Okay, 90 to 100% lump sum for terminal illness like cancer and the rest. Okay, for critical illness like heart attack, but for critical illness they give like 50 to 75% lump sum. This I've seen people recover fully from critical illness and they keep the money to do great things. I've seen people recover from chronic illness and they keep the money. So like I said, we're not going to details of each one. We have separate videos to do that. This you don't get anywhere. If you want to pay for chronic illness separately when you are old, or what, it's a whole lot of money. It's far far more than what the life insurance is charging you for chronic. For in fact, most of the policies are designed, they don't even charge for chronic illness. They will charge for long-term care, which is almost equivalent, not equivalent, but almost equivalent, long-term care to chronic illness. So I just get them chronic illness, so they don't have to pay any extra, even though it's cheap. You know, with the life insurance, it's cheap to pay for long-term care. But most of my clients just say, well, since I have chronic illness, I don't need to pay for long-term care anymore because they give about the same benefit, the similar benefit, not the same. But like I said, this video is not it's not for details because of time. We're covering a lot of things. Okay, we have separate videos that will talk about living benefits, and we can go into details on that. So we talk about the access to your cash. That's the liquidity. You have access to this cash anytime, anytime. You know, um, the insurance company will loan you, will get it as a loan from the insurance company so that it won't spark a tax thing. So you get it as a loan. Usually the loan is very low, you know, about between 3.8 to 4.5%. Most insurance companies will charge for the loan. And remember, this loan is not your money. That means your money is still growing. Your cash value, that's what we call it, is still growing the same way like the S&P 500 up to say 10.5 to 12.5%. So This is what we call arbitrage. There's no other portfolio you can have that can give you this arbitrage, where you borrow money at say 4%, and your money, this is what you are paying, the interest you are paying, right? This is your interest, and your money is growing at say 10.5%. Let me put it like that. The difference, 6.5%, is what? Profit. Guess what business the bank are doing? This is the business the bank are doing. They get your money and give you 1 to 2%, and take it to the insurance company to get 10.5%. Leverage. Leverage. One of the best businesses in the world is leverage. Any business you can do, you can get a good leverage. This time, you're even getting a bigger leverage than what it costs you. That's no brainer. Many people have become multi-millionaires for this. And people ask me, what will I use the money to do? Oh my God. If you have big cash in your life insurance portfolio, this time when the market is down, nobody has money. Real estate people cannot get their money out. People that have investment in stock market cannot get their money out. The only people that can get money out are people that have cash, big cash value in their life insurance policy. You can borrow money, and I always advise my clients, don't borrow money except when it is absolutely necessary, except when you see that you have an advantage to invest the money to make a good profit. So you borrow money at 4%, your money is still growing at 10.5%, and you use this money, you invest in the stock market, for example, okay, put money to buy stock when stocks are low, the buy low, sell high, right? Buy low, sell high. You put it in stock market, and the market goes high maybe within 15 to 20 days, or let's say the worst scenario, 15 to 30 days, mostly, except we have catastrophic problem in the world like COVID. Even COVID, the market came up like after about 3 or 4 months or so, right? And you make 30%, you make say 15 to 30% return within 1 month. And when the market goes up again, sell your stock, return the money back to your IUL. What about that? So guess what? You make 15% of your money that month, right? And you have a difference of 6.5% plus 6.5% that same month. So that month, you have made a profit of 21.5% PA. No, this is not PA. This is per month, right? So 6.5% PA. So it will be 15% plus 6.5 divided by 12, right? So you have another 0.5%, which is 15.5%. That month, that 1 month that you took the money out to invest stock market. This is arbitrage. And it doesn't have to be stock market. It could be any investment. It could be real estate. There was a time during COVID, real estate came down. Nobody asked money. Bank will not give you money because the whole market is crashing. They will not give mortgage loan. The only people that have money to buy real estate are the people that have money in their life insurance. This is no brainer. So you are getting security, you are getting liquidity, you are getting peace of mind, and you are getting an arbitrage. It is a no brainer. Some people say, "Oh, it costs some money. They take part of my money out." I say, take part of your money out. If we design it very well, we'll probably be netting like 1%, 1% costs. Okay, maybe in the initial years it could be a bit higher than 1%, but eventually, after 5 to 7 years, your net cost will be 1% when we design it very well. the max cash value life insurance. Okay. And I want you to say the costs. If you take the money to stock market and you make, say, 15%, which is about the best anybody can make in stock market, okay, on the average, I'm saying, I'm not saying people will not make a lot of money, but they make a lot of money and they lose it as well. So when you look at the average for the year, you see it's about 15% across board. That's best scenario. Most people don't beat the S&P 500, which is about 12%, 12.5% on the average over the years. Okay, over the years, I think they say S&P 500 perform about 10% in the last 20 years on the average. So, so, so if you make, say, 15%, I just say, okay, you are very superb that year. You make 15%. IRS is going to task you capital gain on this. So invariably, you are just making about 10%. So what have you done? You've just taken money out, do all the hard work, monitor the market, all to give the money back to IRS. Whereas you can put your money in an IUL, have peace of mind. You go and sleep. And your money is still yielding your 10.5% to 12% to 12.5%. How about that? So this is no brainer. If you want to do any form of, if you are aspiring to make good money, to do good business, to take risk, you need to put your money in an IUL and talk to an advisor that will design it very well. If you don't have, come to talk to us. And retirement income is the next one. Okay. Most people retire. The social security is not enough for most people's retirement. What else do we have? Your investments, other investments that you have might not be enough for you to retire. If you invest in stock market, if you retire and you're withdrawing money every year and the stock market goes down that year and you withdraw that money because you need it, because you are retired, your money goes down faster. Same thing with real estate. So what other place can you just withdraw money and it will not affect the money you have there? One of the best products is IUL. So the way we design it is, by the time you retire, say you want to retire at 65, some people retire at 50, some people retire at 40. It depends on when you want to retire. We can design it to suit when you want to retire. And we design how much money you can withdraw per month or per year or per quarter, whatever you want, and that will not affect the level of money you have there. Why? Because if you have the scenario I gave you, so supposing you have 4 million cash in this account and this money is 10% per annum, that's 400,000, right? If you divide this by 12, 400,000 divided by 12, you get 33,000 per month. So you can withdraw 33,000 per month without affecting this. But we don't want you to withdraw everything, right? We still want some interest added to your money every year. So we say, to be on the safe side, withdraw 20,000 per month, okay? So that 13,000 is being added to your account per month. Okay. So at the end of the year, your 4 million still grew by what? By 169,000. So you have 4,169,000 at the end of the year. Meanwhile, you are still withdrawing 20K every year. Every month, I mean. And this is tax free because we design it as a loan. How about that? Okay. And it comes with flexibility, of course, like you can add more money contribute, let me say, contribute more money at any time. You can contribute more, you can contribute less. You can decide even not to contribute anything after a while, as long as you meet the minimum. And the way we design the policy, after about 4 years, you might decide not to contribute anything again, no premium, and your money is still growing, paying for the costs and still growing, the way we design it. So this is a no-brainer. Everybody in fact, everybody needs to have a life insurance policy, right? But if you want to do business, if you're a good businessman, you are an entrepreneur, then you need to have a big chunk of your money. I would say about 20 to 30% of your money initially in IUL. Then as time goes on, this could be less. You can make it less. After about 10 years, you can reduce it to, say, 10 to 20% of your money. After about 5 years, you can reduce it to maybe 5 to 10%. But initially, have 20 to 30% of your money in IUL so that it can build cash. It can accumulate cash for you faster. That cash you need at any point in time during retirement, you can withdraw to do business, you can withdraw for anything, no question asked. I've used this money to buy a car. When the interest rate was 7.7%, they gave me at 4%. So this is a no-brainer, guys. So I just want to quickly cover this for people that are for some of my clients, just to remind them, why they do this investment, and because other investments show up. Well, we don't call it an investment because of tax purposes. We don't call it an investment. Other investments show up and they want to use the money. Say, oh no, I'm making more money from this other investment than IUL. I want to close my IUL. Please don't close it. You can borrow money from it, but don't close it. Because most of the investment you are doing outside are risky. You might be sure that I got this, but anything can happen. Anything can happen. That's why, are the bank wise? Do you think the bank have the wisest financial advisor? Yes, they do. And yet they put 20 to 30% of their money in life insurance. So I round up now. I've given you at least 10 benefits of IUL right now. Why you need to keep your money in IUL, why you need to make investment in IUL. If you have more questions, send to support@wetpathacademy.com. We'll put the link. We'll put the thing in the description. So in case I didn't write it very well, or dba@fulfillmentofpurpose.com. fulfillmentofpurpose.com. Okay, I'll see you next time. Remember to like our channel and subscribe to get more powerful videos like this. All right, see you. Bye-bye.